I've seen some trading psychologists and general psychiatrists and stuff. The thing is that people who make trading systems make them with intuition as well. It just adds discipline and adds process. Whereas fully trading with intuition, it's like there's a lot more emotion involved. There's a lot more, it's not as calculated. So trading, the intuition of trading, tapping into your intuition, I'm slightly envious of traders that can trade like that and still continuously make money. But I purely am a system-focused trader. I only trade with trading systems that I've designed.
Just a quick pause before we get into this. Trading can be intense, and staying mindful during your session matters so much. That's why I created and am sharing a free 3-part audio experience that's helped me deeply. 1 for starting your day with calm intention, 1 to stay centered while you trade, and 1 to wind down with grace when it's time to stop. These tracks are yours. Just click the link in the description.
Hey, welcome back. Here at the Market Mamas podcast, I cover a wide range of topics from the intricacies of day trading to mindset mastery and psychological growth, with the goal of the conversations being next level growth for all of us. My name is Becky, and I'm a US-based futures day trader from the Pacific Northwest. My trading experience includes trading stocks, options, crypto, and futures, with both trading a personal account as well as with prop funding companies. Over time, I found that I most enjoy the fast-paced world of intraday futures trading, so that is my primary day trading focus now. Thank you for joining me on the Market Mamas podcast today.
Hey everyone, welcome back to Market Mamas. And I'm very pleased to be back with another trader interview today. And this trader comes to us from the UK, Rajan. Thank you so much for your time today. I can't wait to hear more about your trading experience, what got you into the trading world, and what you've learned along the way. So thank you for being here with me today.
Yeah, no worries. I stumbled across your podcast and everything you do of LinkedIn. So when I first stumbled across it, I watched it, and I really thought that what you do in terms of helping trade is good. So I'm glad to be a part of it.
Thanks. Yeah, that's like the whole energy behind Market Mamas is just like trading can be really hard. And so if we can just have the hard discussions authentically and like grow together, I feel like there's a lot of power in that. So I love picking other traders' brains too, because different perspectives shed light on different topics in different ways. And so that's kind of the beauty of a podcast too, is you can pull in different minds around the same kind of subjects, and we can kind of just evolve together in this world. So let's start to hear your story. When did you first start trading? How did you get into this world?
I know this is going to make me sound very old now, but next year is my 20th year in the markets. So yeah, it's been a fair amount of time. And I actually come from a sporting background. So I grew up playing football, which is soccer, in America. We take that very seriously in the UK, as everybody knows. And I grew up playing in football academies and things like that. And then basically towards the latter end of that, I went to university to study sport and exercise science, and I got a job in a gym. So I was, just planning my sports career, still coaching, and all of that kind of stuff. And gym that I got a job in was the JP Morgan gym in central London. So in Blackfriars, which is like near the city of London, where all of the traders are based. And I knew nothing about trading when I was that young, like being, 18, 19, 20. I knew about trading in terms of investments because my parents had bought shares in companies and had share schemes at work and stuff like that, and pensions and whatever. So I knew of it. But when I got to working at JP Morgan, all of my customers were fund managers, traders. They were all people that I was training for events like triathlons, marathons. I was training them for things like that. And they were very disciplined people. So I got to know these people quite well. And I got to see them at their best and their worst in an exercise environment. And we just started to bond, really. And I learned more about trading from that.
That is an incredible introduction. That would be really interesting perspective, because there's so many parallels to pushing yourself to exercise peak performance in exercise, as well as in trading, that discipline and attention to detail, focus, ability to push through pain. Like, what an ability to start learning about trading, from a side perspective. Awesome.
Yeah. So, then I started to earn good money in the gym for my age at the time. And I would ask the traders, like, okay, I'm earning good money. Like, where should I put my money now? Like, you know what I mean? Like, can I buy some stocks that are going to do well for me and stuff like that? And they suggested a couple of companies. Like in the UK, we have like a supermarket called Tesco's. So one of them was like, yeah, Tesco's is growing quite nicely. Like just, he spoke to me about risk, but he was like, if you've got some spare money, see what happens in there. And I said, okay. And another one was talking to me about airline stocks, and he said EasyJet. So I put some money in EasyJet. And the first thing that happened when those stocks grew a little bit, it enabled me to pay for a holiday for myself and my girlfriend, who's now my wife. And I kind of got hooked on it. I was like, look, this money was just sitting in the bank and I was doing nothing with it. I put it in these two stocks and I'm able to get a holiday now. We went to Corfu and I was like, oh, wicked. That's it. If I can do this on the side, I'm in, And then I started to take it way more seriously from there.
Nice. How old were you then?
Oh, I was in my 90s, 20s that time. So I really first started pushing my trading at 21. So I'm 40 now. So that was when I really started pushing my trading when I was 21 years old.
That's so cool to get to be in there when you're a younger adult versus like some people who are coming at it with their second career. But then you have so much potential to grow it. I mean, you've come a long way with it seems, from then.
I tell you what, though, in that regard, the journey is the journey, because I would think that if I came at it later in life, I would have come at it with a more mature mind. So I don't think that it's a good thing or a bad thing starting early, and I see it a lot because some of my traders, like one of my best performing traders is 18, 19 years old now. But then I've got other good performing traders who are in their 50s and 60s. So, but what I do notice with that is that how their maturity and how, good things, speed, maturity, technological focus, all of this, there's strengths and weaknesses to both, really. So I wouldn't really look at that as a good or a bad thing. I just think everybody's different.
Yeah, that's such a good perspective and a great point. Yeah. I think that similarly with parenting, I didn't have a baby till I was 30. And I think I had so much more patience and calm and ability to be neutral in a situation than I would have if I was maybe a 19-year-old parent or something. So I think
100%. I was in my friendship group, maybe like second or third, in terms of who had kids in our friendship group. And my daughter taught me so many interesting things. Being a parent changed my trading a lot, massively. That was one of the biggest things I would probably say in my life that changed my trading. So, it was very important.
That's interesting. And I totally agree. I think parenting teaches us so much about it because you do have to be the level head in any situation. You have to be able to bring everyone down a notch and focus on what needs to get done and stay with the schedule and make sure you're balancing out the days. And it's similar energy to trading.
Yeah, it is. And, speaking about it from a male perspective, if you have, I've got some traders who don't have kids yet. And they're very aggressive in terms of how they push their P&L. They're very results focused. But, if they're in that 25, 26, 27 years old age gap, for men, that is when they push their careers. That is when they push really hard, right? They're ambitious at that age. And then when some of them have come through and had kids and stuff, I really see a change in them. I really, really do. And it's interesting, like with the female traders we have a very high percentage of female traders at our company. And, if there's a time where, going on maternity leave and stuff like that, and then getting back into trading, getting yourself sharp, and all of that kind of stuff. Again, it's like being off during the summer or during the Christmas period, when you need to come back to trading again, and getting yourself mentally pre-season back in the game. There are differences there too, And I'm not going too far into it, but I did a podcast with some of our traders, which was basically about females in trading and having a high percentage of female traders at ours. And we had various discussions about, post-menopause, pre-menopause, hormone changes. And I'm sitting there in this discussion, I'm not allowed to speak right now. I'm not the authority in this, But honestly, it was interesting for me to understand that, because then I get to know that perspective and how those changes and having a baby and all of this kind of stuff works from that perspective as well. So it was, a great discussion.
Yeah, I love that you're having those conversations because I think it's important to give a little bit of weight to what you're doing in your life. And if you have a major life event and big hormonal fluctuations or, even just seasonal changes, that should be factored into how aggressive you are and how much time you give to trading, because there's going to be seasonal fluctuations with your life. And to be able to always put on leverage and take on the volatility of the market, you got to make sure that it fits with where you're at, what you have going on with your whole body, your person, your family.
Yeah. And Serena Williams was brilliant when discussing this, in tennis. She was a great advocate of females' peak performance during times of, different stages of what goes on through people's lives. That was a really, really good example, and an example that, I have used with some of the female traders that I have. to go and look into that story, because you change. Everybody changes throughout life. Like, we're not always going to be the same, but you have to adapt to those changes and keep performing as a trader. At the end of the day, this is our job. You've got to perform at a peak level for a long period of time. How do you do that when your life's changing around you,
Yeah, I love that. And it speaks, I think, to the factor that you have to treat trading as a business. Like, it has to always be, whatever you have going on, you have certain risk parameters that you must honor every day. You have certain size regulations based on your leverage that you should do for your account size and your position size, certain times a day when you can trade and when you're distracted and you shouldn't trade. And that no matter what you have going on, it is a business, and it's financial money is moving all over the place. And so you always have to be cognizant of that and be able to tune out a little bit to an extent what else is going on.
Yeah, so this is detachment, right? So like that, we're working on different areas of detachment, and like we've spoken about sports a lot, and this is where I think my sports background helped a lot, is like when you cross the white line and you're in your game, like you actually stop thinking about everything else. Like you don't think about what's going on at home or kids or what's going on. When you're trading, and that's it. If you're playing football, you're playing football, and that's it. And that's that analogy of like when you start or when you cross the white line is a very good analogy for trading.
I love that visual tool of like, you're crossing into this mode. This is where all of your energy is for this period. This is what you're doing, and take it seriously and focus.
Yeah, presence. Yeah, for sure.
Tell me about your business, because you're speaking about your traders. So what do you have going on there?
Yeah, so we run a prop fund. So like we're called DND. So they were the three founders of our company. So my surname's Dhall. We've got North, who's James North, and Ocean Dance. So we used to trade together in a Zoom room, actually, and that's how we started the fund. And we were backed by a company in America, and they basically were looking around at other prop firms to see who could make money for them if they funded them. They chose us. We did well at the beginning. Then they basically said to us, okay, there's three of you. Do you think you could turn this into a company with 20 traders? And we were like, oh, we think we can, because we knew other traders as well. We enrolled more traders in, started training them, got a few of them through the door. And then we got to that point. They were like, do you think you could get 50? And basically like just trying to push this. So what our job is that we bring traders through the door, we coach them, we help them, we give them the correct market access that we feel like is needed. And we all trade in a live chat room every single day. So we post our trades live. They post their trades live, and we're all just basically a collective group of people with the common goal, just to try and to be good, profitable traders. So we're just a community of traders now that are trying to be good, and D&D is the main prop fund of that group of traders. So if somebody ends up being really good, they will join the prop fund, and we will capitalize them and things like that. So it's just like, it's a step process. So somebody wants to learn trading, they come in, they learn how to trade. Then they trade with their own money for a while, and they see if those strategies work for them, and they twist and turn until they get it right. If they get it right, we'll back them, and then we try and enroll them into working with our company. So it's a step-by-step process into turning traders who are aspiring or who have been trading for a little while into professionals. It's like a pathway of turning into a professional trader.
Yeah, that's awesome. What a great opportunity for any trader who is aspiring to kind of get underneath that umbrella of that experience that has that structure to raise them up. That's a killer opportunity. What time frame do you tend?
Time frame wise.
Yeah.
We've got a mix of people. I'm a day trader, so I trade the US session only, like the major stocks, really. Because we're in Europe, we have a group of traders of about, I'd say, 20 to 30 traders that trade the European Open as well. So there's people that trade Europe. And then we've got swing traders who are long-term position traders that are led by one of our traders called Mayan. And they work on trades that could last up to 2 or 3 days, all the way up to like months sometimes if they're performing well. So we basically, within the business, we have pockets of traders that have put themselves into little groups of what they like to trade. European session, we've got a group of traders. US session, we've got a group of traders. And then swing traders, we've got a group of traders. So they're all in these little pockets within our company.
Yeah, I think that's so smart to allow them to figure out what they prefer. Like what time of day they're the most sharp, what works with their family and their schedule, and what tendencies like intraday scalping versus the longer term position holding Because then I think when
Yeah.
you make trading speak to you, you can just do so much better and take it so much farther because it really fits with who you are and how you best see it. And from my experience too, when I lean into my strengths, I function better and I get better results. So that's awesome that you have that flexibility and you encourage them to find their specific niche and then grow within that.
Yeah, correct. So this is an ongoing joke within our company. I'm not a morning person at all, right? So I'm never really in the European session in the morning, and everyone says it's because I'm lazy, but I'm not lazy. I do the school run at that time, and I'm awake at that time, but I can't trade at that time. My mind isn't as sharp in the morning as it is in the afternoon. So generally, I'm a night owl. Like I prefer being awake in the evenings. I'm more sharp. I'm stronger. Like even with my exercise and stuff, I'm just a lot better. My body functions a lot better in the afternoons and the evenings. So I only trade in the afternoon and evening because of that. And yeah, it's just like you said, it's important to work that out as an individual. So we do personality assessments and risk assessments on people that walk through the door as well. Just we can help work these things out. And also some people have a routine that they live by, but trading against it is a problem. So that can be detrimental to someone.
That's powerful that you have that holistic approach to it, because I think just focusing on technicals alone of like, this is the pattern, this is how you get in, this is how you need to exit, only focusing on technicals is going to really miss the big picture of creating a successful trader. Correct me if I'm wrong, but like you have to learn the technicals, but you have to really like dial in who you are and what you bring to the table, what shortcomings, what stressors you have and how to mitigate those to the best of your ability. And so you really do want to test your psychology and your performance and your risk factors and then create the whole person as a trader versus just teach technicals.
Yeah, so having a long career as a trader, that led me down a rabbit hole, what you're talking about, actually, because when I first started trading in the gym, I did really well. So, and this wasn't necessarily a good thing. So if anybody that's listening, being successful at the beginning, I don't think is a good thing, because I opened my first account with like $200-300. Like really, it was very, very low. I turned that into $4,000 in the space of like 6-7 months or something. And first of all, I didn't realize how good that return was. I didn't have any benchmark to test it against anyone, because I just thought all traders were millionaires and they were really good because of the gym, because I was in that environment and they were millionaires and they were really good traders. So I thought, okay, I'm going to take 2 weeks off from the gym. I'm going to stay at home and I'm going to see if I can replicate this on a higher frequency. So I moved from the 4-hour charts and 1-hour charts down to the 10-minute charts, and it did not work for me. I lost half of the money that I made in those 2 weeks. And then I said to myself, look, I'm going to go and pay for a course and learn this properly, because I can see that there's value in this and I can see that I've made money in this, but I couldn't actually see what I did wrong at that time. So I cut that trading account at the $2,000 from $4,000, and I paid for a trading course to go and try and learn how, real traders and good traders do this. When you said that prior about learning about yourself and doing all these things, that pushed me right the way through the industry, because in my mind, I was searching for the Holy Grail. And I thought that the next person knew something better. So I worked in a physical foreign exchange company selling options and forwards, futures products. And I learned a lot about the market mechanics there. Then I went to work as an analyst, like just a plain analyst role, like doing market research, basically. Then I started working for a fund, and I started trading in a fund. And then I worked in a real-time news environment. But throughout this whole journey, that journey where I was in the industry working in the city of London, I think that must have taken me about 7-8 years or so. But I met some of the best traders. Like, honestly, I think they probably could be the best traders in the world, but also some world-renowned economists and stuff like that, because I was networking through that time. And I really realized that nobody knows anything more than anybody else. That was the biggest lesson that I learned, that there wasn't one way that was better than anybody else. Nobody knew anything more than anybody else. It was just swings and roundabouts about, probability really over that time. I had some great friends, some analysts, traders at JP Morgan, obviously, because of having been there. I met some traders from Goldman Sachs and some economists and Citi and all of this kind of stuff. And just through general conversations, going out with them for a beer or for a coffee or to a restaurant, I really learned so much about the industry and about trading from that, more probably from the networking that I did than I did from probably the education.
I love that you say that, because I I feel that as well. The more I talk to experienced traders, the more I'm just soaking up. There's a wisdom that comes with trading that you can't replicate or you can't force faster. I think you just have to have exposure to it. You have to experience trading days, the highs and the lows, and it shapes you as a person and as a trader. And the ones that persevere years deep in their career are different. They're just a different breed, and you can catch some of that energy off of them. Every trader that I know that's been a trader for more than 5 years has had that sort of like, it's almost like you calm over the years that you're trading. Like you're more peaceful about it. You respect the market and the game of probabilities and your risk and the way that it progresses and the fact that you aren't some genius, just that you are dialed in and you have a system and you respect it. And I think that it's calming to me to have those conversations, because it's like, this is the direction that you go when you just persevere in this game and you take it easy and you let the experience compound. And I also found that you can learn about intuition and the ways to just do subtle changes to your trading approach and system to make really substantial changes over time. So I think that's really interesting to me that you say that those conversations is what really helped you evolve.
Yeah, intuition is a subject that I have a lot of trouble with, actually. Like it's a deep thought process and kind of pain of mine in trading, because I stick to a system. So like designed trading systems for a long time. And I ran an account alongside my trading system that was purely intuition based and one that was a system based. And the system would always win for me. So what I learned over time is that I could not trust my intuition based trading. I could trust my system based trading, right? But the thing is that when I've seen some trading psychologists and general psychiatrists and stuff, the thing is that people who make trading systems make them with intuition as well. It just adds discipline and adds process. Whereas fully trading with intuition, it's like there's a lot more emotion involved. There's a lot more, it's not as calculated. So trading, the intuition of trading, tapping into your intuition, I'm slightly envious of traders that can trade like that and still continuously make money. But I purely am a system focused trader. I only trade with trading systems that I've designed.
How did that evolve for you? Like, did you start with discretionary, more intuition-based trading, and then you experienced that people were trading systems, and then you started to learn how to code them? Like, how did you get to this place?
It was such a long journey, because I started with technical analysis. So I would trade with trend lines and things like that, long-term, broader-based trends and trend line breakouts and things like that. That was where I first started. And that was the one that was successful at the beginning. I then went full circle. So I went to learn about macro analysis, because really it was the ego of thinking that the more intelligent you are, the better a trader you were going to be. So I went to learn about, macro analysis in the sense that what central banks are doing, it was going on with GDP, inflation and all this kind of stuff, employment numbers and everything, reporting on that and writing analysis pieces about that. And then I started to blend the two of them, where I would use the technicals at certain price levels and have a macro fundamental bias behind it. And then later on in life, I worked for an algorithmic trading company, and I was just purely designing algorithms, trading algorithms then. And we would run like 8 or 9 at one time and switch between the best performing and the worst performing ones. And then at the end of it, I went back to just purely doing statistical analysis and technical analysis together. And what I do with that is, like, let's say we have a Fed meeting coming up, or we've got a theme in the markets, which is potentially inflation and job numbers or something like that. I would think about that in my mind, and I would think about, okay, well, the market bias is long, but the chart would tell me that anyway, because the charts would be trending in that direction. So it's not that I need it there. It's just that I've got it in my mind that it's in the back. But all of the trading decisions, risk, entries, exits are all governed by technical analysis now. So I went full circle over that time, but all of my trading systems are technical and statistical focused. So I would probably say like it's 50-50 for statistical analysis and technical analysis now.
Yeah. I love that you broke that down for me, because I recently did a presentation with the Blue Sky prop funding company in America, and where I broke down the differences of discretionary and systematic trading. And I pulled some research from that from the last 10 years. And it was very interesting about how systematic trading really has the consistency results that you just can't find in discretionary trading, because it's not as easily replicable. And there's so much gray area, and there's so much more opportunity for emotions to play into your trading outcomes when you have more flexibility with your system, versus if you strictly trade a set of rules, the same way every time based on back-tested data and probabilities, the results were just more steady and had a long-term equity curve up, depending on how well you manage them and all. But I think that the information is out there that trading, when you have the money and the leverage flying around, it's so easy to allow your emotions to monkey with your outcomes. But if you're so regimented and disciplined with a system that you really understand and stand behind, it's a different type of experience.
It is. So like I follow Stanley Druckenmiller and Paul Tudor Jones, right? Both of them are technical analysis type traders, but they have a macro focus. So they will understand macro, they will look at what's going on with a discretionary mind. But all of their trading triggers and a lot of their trading decisions, they use charts, right? So there is a way, obviously, to do both. But the technical analysis, it governs your risk, it governs your entries, it governs your targets. And that's the point that I feel like you're making there, because it takes the emotion out. Because if you're in a good trade, nobody knows, you and me here, if we buy like Apple or PLTR or whatever today, whether it's continue going for the next 5 or 10 years. None of us know the answer to that, right? And, anybody could say, oh, yeah, if I bought Apple in the 1980s, I'd be a millionaire now. Anybody could turn around and say that, with hindsight analysis. Whereas like when you are trading with a system and you look back at the statistics of, let's say, roughly how far, the extension waves go, you then know statistically, on average, if you take a breakout trade, how far this is going to go to give you profit. You know that. And they're very important things that to understand as a trader, like, because you could sit here with a risk to reward of like 150 to 1 and it being unrealistic. But you could say, well, the last 18, 19 breakouts in this stock have taken it to like, 2 or 3 standard deviations of the move. And that could be where you're looking to take profit or something like that. They're good rules to live by.
Yeah. And I think having the data based fundamentally behind your system is powerful, because you do have a higher likelihood of probability. And if you get in based on this pattern and the setup with this risk, what is the higher likely targets based on what this instrument has performed in the past, and having that data behind your system is just a more powerful stance than a gut feeling type of situation.
Yeah, of course. And I think like retail traders or traders who aren't professionals, coming into the market, they've got to deal with a lot of emotion. They have to deal with fear and greed, and they have to deal with what's normal and what's not normal for them and them. And everybody has a different relationship with money. So there's so many variables when you're new as a retail trader coming into this market, but then you're trading against professionals as well. So they'll know that and they'll understand that. And that's very, very hard. And, I'm not painting a difficult picture for somebody who's new. It's just like you're entering a world that has no rules. It's chaos and random. You have to decide what your rules are and stick to them.
What would you recommend for traders who are in that situation right now, where they maybe did have some beginner's luck and they know that this is a real opportunity where you can become a successful trader, learn an edge and make money, and maybe they've had some really success, and now they're trying to figure out how to lock in that discipline? Because I think that's extremely common in the retail trading space, that people are stuck in that zone of knowing enough to take a good trade, but still self-sabotaging enough that they're not consistent. So what do you think helps people make that transition?
Yeah, so this is a really difficult time in the world for traders who are new because of influencers and things like that on kind of social media and all this kind of thing. So that it's a minefield for anybody looking for somebody that's reputable to try and learn this from. But taking a good quality course from somebody that understands risk to reward ratios, win ratios, probability ratios, that is what I would say, because you don't know what you don't know coming into the market. Nobody knows what they don't know. Somebody has to teach them. But finding somebody reputable is definitely what I would say. And, finding somebody who is transparent with their results, is transparent about winning and losing, and things like that is key. Anybody that's on a yacht or a Ferrari or whatever, saying that they can teach people how to trade, the background of this industry in, how people are paid to promote things is very, very shady. So you just have to be realistic about who you're choosing to do a course with, where you want to take your education and why. It's a very, that's something that should be taken seriously.
Yeah, I agree with you on that. And if you really want to become a 7-8 figure trader as your end goal, I think it's important to prioritize the early years as the learning years. Like you need to pay your market tuition and you need to get educated. And so in that situation, you ought to pay a mentor as similar as you would pay a college to get a degree that would create you, put you out as a doctor or a lawyer or an engineer. You need to pay that tuition early on in the form of trading and funding your accounts and paying a mentor and learning. And then that is how you can get a stronger foundation to stabilize in that role. Because I think just trying to learn purely off of the variety of social media and YouTube channels out there that kind of are a modge podge of a hot mix of some there's authentic, but then there's a lot of exactly what you just said. And it's so dangerous to have that mix in there without a stable foundation that you can really trust and build upon. And to know that you ought to invest in that early in your season, as you know, you're not going to be profitable right away, but then that could set you up for a great future if you really embrace it.
Yeah, if we're honest with ourselves about this, like, the best trader that ever lived that I know of is Jim Simons, right? It took him 11 years to get into flow to produce the results that he did at his fund. We talk about like Warren Buffett, like if we, Jesse Livermore in his book, if we go through a lot of the traders, like it takes a long time to become consistently profitable. For me, it took 4 or 5 years, around 4 years for me to like start turning break even and doing that well. And then 5 years, year 6, year 7, I started earning money. So that should be taken seriously. And we started this company, like in a way, part of my ethos is that I didn't have a place to go with a community to learn about this. But actually now, education is way more accessible. So like, I think trading education, to be honest, is soon going to be free because of things like ChatGPT and Grok and all of this kind of stuff. I think it's going to be free. But what isn't free is like having people to bounce ideas off and a community and all of that kind of stuff. Podcasts are really, really good. They really, really help because hearing people talk about getting depth into the psychology of how they got to these places is way more important than understanding how a trading system works, because we're all human. The humanness of being a trader is what's hard.
Yeah, I really appreciate you saying that because I feel the exact same way we really need to normalize the fact that this is like a long game situation and it's going to be really hard for a few years. And some people are just like hell bent on 6 months to profitability. And you see that all over the place. And it's like, I just shush, because don't make people feel bad when they're not there. And it's going to be different for everyone. And we all have our own like internal background that we're coming to this with that we have to sort through for ourselves. And so I think that we really have to just slow it all down and respect the fact that, like you said, like trading, the most successful traders, I've done some research into some names as well. And it's like they took years to really turn that curve and then start to let it gain momentum and really get to the success that they have had. And then it can compound rapidly once you get there. But like it doesn't have to be right away to be a successful trader. It doesn't mean you have to nail it the first year.
And the irony of this is that if you are successful at the beginning, you're going to find it harder. Because if you're successful at the beginning and your first 1 or 2 year trajectory is very high, you're not going to understand how your body and how you need to react when you go through a hard period, because you're then going to beat yourself up. It was like, oh yeah, I was really, really good at this at the beginning. Why am I not good anymore? But the market could have changed materially in that time. So that's why adapting, evolving, being fluid, that's part of training as well. And I've had that. I've trained thousands of traders in my lifetime. And there's 3 that come to mind that did really, really well at the beginning. And I coached them and they did well for a year. And then after that year finished, they completely capitulated, but called me and I had conversations with them and were like, okay, yeah, I did well, but I didn't understand how I needed to react when the market turned on me. Like, because there were a lot of traders in post 2008, 2009, let's say from 2013 onwards, that had never seen a bear market.
Right.
That went on for 10 years.
Yeah.
That bull market did. So how would they react when a bear market turned up, like COVID and rate changes and things like that? And it did come. So traders then had a really sharp learning curve. In the city, there were traders, who are younger than me that were at the ages of 26 all the way up to 32 that had never seen a bear market before. And they were just used to making money.
Right. Yeah, it's a great point about when sentiment changes and it shifts on you and your system no longer works. You have to be able to take that ego hit and back up and reframe and figure out what's going on and how you need to adjust. And sometimes if you don't catch that in time, it can be a massive financial hit before you can stop that.
Yeah. So one thing that happened to me this year was I used to trade an opening gap trading strategy prior to the Trump tariff tantrum in April, right? So I'd been trading this system, this exactly the same trade for nearly 400 trades, and I take one trade a day. So it was, 2 years worth of trading data that I had of trading exactly the same way at the open. During the Trump tariff tantrum, what happened was we were getting big gaps at the open, and the volatility squeezed, like the stocks weren't moving anymore throughout the day. So my stops placement was okay, but there was no volatility to hit my target. For 2 months, this went on. And I changed my system. So I then had a drawdown that I knew that if I hit my drawdown, that's when I would change my trading system. I changed my trading system in April. So I had a testing phase of April and May where I was doing something along the side. Then in June, I started implementing that system and then carried it on to today. And now I'm up to nearly 200. I think I'm at 168 or 170 trades of the new system. But I had 400 or so trades of the old one. Now I'm up to 160 odd trades of this new system. And there was a period in there when Trump went absolutely mad where I had to adapt. Otherwise, I wouldn't have survived.
So you speak to the specific number of trades that you have had within your system. So it sounds to me as if you do some data tracking and you pay attention to what you're doing, what the results are, and how it works over time. So is that something that you're pretty attentive to?
Yeah, so this is more holistic than it is mathematical, probably in my mind. So I keep a trading journal. So when I enter the trades, I enter the trades in the live chat room with everyone. And when I take a quick screenshot of the trade before the outcome has happened. So I put that screenshot in my journal, basically so I don't do any hindsight analysis. So I can look at that picture and say, would I take that trade again if that information was presented to me at that particular time? If the answer is yes, I know I've done my job correctly. Then when I get the feedback mechanism of the trade finishing, I then write like maybe 2 or 3 lines about how I reacted during that trade, what the outcome was for that trade, whether I would take that trade again, if I missed any information and I was blindsided. And this is all not only for data keeping, but it's for my emotions and my psychology. Because then if I can look at my trading journal at the end of each week or the end of each month and say, yes, I would take that trade again, then I know I'm doing my job correctly.
Yeah. That data collection and reflection, I think, is so powerful because I think that's where we can spot the shortcomings of our system sooner and address different needs differently. And it's our own personal data. Like you're not taking in the noise of everyone else, what everyone else is trading. It's more like how you see the charts in real time, what choices you make, how it played out. And if you need to make any fine-tuning adjustments over time, you can have that information in a place to look back on and help refine your process. Like, I think that that's so powerful. And I think that early traders sometimes don't take journaling as seriously as they should, maybe because that data can really be powerful as you evolve through it.
Yeah. And, like having somebody or some people or something that you're accountable to, and, like radical honesty or radical vulnerability. Having that is very important. So if your journal is open and your trades are open and your account history is open, you can't hide anything. You can't turn around and say, like this was right and this was wrong. So we recently had a trading boot camp and like a trading meetup in Dubai. And on the plane journey, I was sitting next to one of my colleagues and my friend, Ricky, and I had my journal with me on my laptop. So I thought, look, I wanted to go through our journal. So we had a plane ride to go 4 hours on this plane journey. So I was like, let's open it up. So this accountability really helped me because we looked through all of my trades. So there were 150 or so trades for me to look through of this new system that I had migrated to. And of those trades, there was 5 of them that I really shouldn't have taken, that my bias on my higher timeframes and, support and resistance was not really great on those trades. But the rest of all of the other trades were pretty decent in there. And going back over it really enabled me to work out, why I shouldn't have been in those trades in the first place, but also going to meet our cohort over in Dubai, like to talk about why those trades were not good. And then I got the most recent stats of the system and how the system works if you perform it perfectly versus, adding in that little bit of performance gap in there, how it worked anyway.
I mean, that's so powerful in multiple ways because look at those results. I mean, 5 out of 150 some odd trades that you would not have preferred in hindsight. That's incredible statistical data. And I think that bodes to the work that you've put in over the years because you wouldn't be able to have such a fine-tuned system without tons and tons of data that have gotten you to this point. Right?
Yeah, correct. And the thing is about how realistic they are with their win rates and how they feel about traders. Like my win rate is 50%. I generally win about 50% of my trades. So it's just that I have positive expectancy because I normally go for 2 to 1 on my risk to rewards. If I can push it, sometimes I'll push it if it looks really strong. But on average, I'll go for 2 to 1 on my risk to rewards. So, if I take 100 trades, I'm going to lose 50. And so that does mean I have to be a good loser.
And that's a profitable expected outcome based on your statistics and the way that you manage your risk in that situation, which is also a great information to share with new traders, is that you don't have to have a consistent only winning score in order to be a profitable trader. You have to be able to respect the game of risk and not tilt when you have a losing outcome, because that's the game of probabilities. You're not going to win every trade, and profitable traders don't win every trade.
And like, I'm lucky enough to be in touch with some of the best traders in the world. So some of the best funds in the world and stuff as well. So having spoken to a few of these people and got statistics from some of these funds, a lot of them are at 50% as well, or 52% or 55%. This isn't a game where, you need an 80, 90% win rate, or you have to be perfect to be good at this job or this profession. You have to be realistic with yourself. It is a game of probability.
Yeah. See, that's what I mean about how it's so calming speaking to people who have been in this game for 10, 20 years, because that fact right there is that they are confident in their system and they are not at an 80 or 90% win rate, because that's not the game. That's so peaceful for me as a trader. I'm 4.5 years in and I'm doing pretty well, but knowing that there's no perfection. You're not striving for perfection in this game. That's not it. And so that takes a lot of the pressure off to be able to leave a losing trade in a red outcome, and the next day maybe have a better opportunity. And the fact that you manage your risk, that's a part of your trading business.
Yeah. And then psychologically preparing yourself as well. So I don't trade massively. I don't know about the audience or yourself, but I take one trade a day. That's what I normally do. But the reason why I take one trade a day is because if I lose, that reflection period of 24 hours is enough for me to gear myself up to get ready to go again the next day. But there are some traders that I have that could trade 6 trades a day and not bat an eyelid. They don't care. You know what I mean? Their feedback loop and their period of getting over those winners or losers is quicker than me. So understanding yourself, and, it may take you a week to get over a loser. It may take you an hour to get over a loser. Understanding yourself and your psychology to working that out is part of your strategy.
Such a good point. I want to ask you about the period early in your trading career before you really turned into profitability. Was there a period where you really were frustrated and wanted to quit? And what did you do in that situation in order to persevere through that and start to turn the curve for yourself?
Yeah, luckily I'm quite a conservative risk manager. I've never really blown any massive accounts. The biggest accounts that I think I've blown is really about $4,000 or $5,000. And, that's relatively speaking to someone that might be a lot of money. For somebody, it might not be a lot of money. But for me, that was okay to be able to have a job and live my life and just continue to work on this trading stuff. So that was a key factor for me, is that I never put myself or my family in jeopardy while I was learning how to do this. So I was always felt quite comfortable while I was going through that learning period. But I'm very competitive. I'm a really, really competitive person. So that's what drove me. There were times that I thought that I'm not getting this and that I need to give up. There were times I would definitely say that. But after a break of a week or a couple of days, honestly, I would pick up another book. I would learn something new that I would want to try. I just kept going. I like relentlessness and grit, a big determining factor of being a trader.
I love that so much, because I completely agree about relentlessness and grit and the importance of taking breaks. Because if you get knocked on your butt and you really felt a certain loss or a losing streak or whatever, take some time, do something else that fills your bucket and spend some time elsewhere, and then come back at it with a little bit more fresh, a little bit more calm, let your adrenaline and your hormones settle from the stress that you experience, and then come back at it. And that, I think, is really just a perseverance. I think you have to persevere through that period where you take your hits and you don't fully understand them and you have to learn through them. And then it gets less, it gets more manageable over time, is what it feels like to me.
Yeah, you said something earlier about ego. And I just want to, from my experience with the traders that I've managed, I just wanted to say something about that, because your trading isn't a reflection of yourself, of your intelligence, of your inner being. It's not really that, because I think that's when people get a bit demoralized. If they put their ego into I can only do this if I'm smart, or if I can't work this out, that means I'm stupid. That's really not true. So I've had some traders who have done very well for a while, struggled hard at the beginning, done very well, felt like they're doing this and they're getting it. But then all of a sudden the markets change and their strategy stops working for them, and it hits them quite hard, and they feel demoralized because their self-worth is tied to their P&L. So there has to be some detachment there between your P&L and how you feel about your intelligence and your self-worth, because the markets change.
I definitely experienced that too, because for me, it was ego and self-worth of like, and no one in my family comes from the finance background or trading at all. So I'm kind of the first in my small, like, intimate community and family who's doing this. And the question always is like, so you making money yet? Since like month number 2. And it was like that question haunted me. And it's like, I just got to tune it out now because they don't understand this world at all. And it doesn't mean that I'm worthy or unworthy as a trader based on that week's P&L. Like that shouldn't be the outcome. And they just don't understand it. So tuning out that noise has been helpful for me and knowing that you can't.
Yeah, well done. I mean, like, not a lot of people have that foresight, though, right? They do think that traders just make money all the time, and they think that, oh, you're a trader, you must be rich. That's what a lot of people believe. So, because that's what's projected from the outside in the movies and in books and things like that, but it's just not true. So, yeah, you're like, I think that's the first question that I get. Oh, you're a trader, you must be really rich. Well, actually, no, I'm a trader. I have a lot of discipline and I have a lot of self-control. That's what it's tied to. That's what being a trader is tied to.
Right. That's why you weren't a boom and bust, retail trader for 6 months or a year and you lost some money when you left and went back to something else. No, you're a trader because you have that relentless discipline and it's a part of a bigger picture of who you've become. And it's an income stream, but it's not your whole worth, your whole identity. It's not. It's a part of it. Like,
yeah. But then, the irony of it is that when you get that, that's when you start making money. That's the irony of that. It's quite funny that you have to be humbled to such a degree for you to end up being good at this job.
I completely agree. I think the market will humble you. And in order to take that humbling with respect and appreciation and move forward from it has been the biggest catalyst for me to change. And my mentor really was pivotal in that for me because on my losing days, he would experience when I would get really frustrated and sometimes I would cry and he would like take me down a couple notches. But then in that moment, he's like, this is where you need to change. Like you have to be able to take these red days and not let it have such a meaning for you. You have to be able to recognize that you're not going to win every trade. And it doesn't mean that you're not an awesome trader. Like let it go do something that like settles you down and come back stronger. And the first couple times it kind of pissed me off, but like he was 100% right because you do have to respect that. And that was something that being humbled is not always the easiest thing. And certain days it will be easier and certain days it will be harder, but it's a requirement in order, I think, to push through it in trading.
You'd be very surprised at this, but I coached a trader who's at like an investment bank in the UK. And I said to him, like, can you have a losing day and it still be a good day? And he said, no. And I was like, so you always feel bad if you've lost for the day? And he was like, yeah. So we went back through the process of his trading. And I said, well, look, you can have a good day and still lose because you followed all your rules, because you were disciplined. And like, if you weren't, you could have lost so much more money, So that's actually a good day. Observing your stop loss and being disciplined when you lose is a good day because it could be so much worse if you overtrade, if you revenge trade, if you battle the market, because the market doesn't care about you.
I completely agree. And going down that tilt revenge trading slide is so dangerous. And so learning how to respect a small red day is a powerful pivotal point for a trader because then you really can allow your big winning days to surpass it over time.
Yeah, I wanted to ask you a bit of a cultural question. So like I played poker in Vegas in April and I played poker in the UK. And generally, like in America, when I was playing, there were some good players around the table, but they felt a lot more emotional in America than they did in the UK. In the UK, we're very reserved. And I'm wondering if you've ever noticed a difference of that between traders like from other countries versus traders from America, like the euphoric nature of when things are going well versus, how when things are going badly, like because I have a few American customers and a few American traders on my book, and they are more enthusiastic about trading. In England, conversely, they could get more depressed about trading easier in England. So I don't know, culturally, I don't know if you've ever noticed it or.
That's so interesting. Yeah, I have talked to traders from, I think, 13 different countries now through the podcast. And, my sample size is small because I've talked to traders that I have heard of their name from some source. And so that will skew it a little bit as well. But I do think culturally in America, we're excitable. Like there's a lot of energy, there's a lot of hype, there's the social media feed into it. And so in the early traders of the American traders that I know, there is definitely a higher energy. And the ones that have made it through to profitability are the ones who have been able to tamp down that and find a more neutral stance, because that, in my experience, and from me myself as an early trader too, I struggle with that, of having the highs and the lows, being these big emotional swings, and like the influence of all the external noise was a huge factor for me. And the way that I have been able to improve in time is to just kind of lock in a little bit more and settle down. And I think that you're spot on with that, because my experience just with American traders is that there's a lot of energy there, and we really like to ride the highs and we really like to hide the lows, which I don't think is the best plan, but it's hard to adjust that.
Definitely. And it works both positively and negatively, because I think in Europe, and especially in the UK, I think generally we're quite a sarcastic bunch, like in the sense of like the way our language is and the culture. So like when they get depressed, they have that mentality of like, why always me kind of mentality, or like, you know what I mean? And when I have worked with some American traders, they pick themselves up like a lot better as well. So it works both ways. And that's me being generalistic, because I've met both on the other sides of the coin as well. But that's something that does need to be thought about intrinsically for each trader on how because the market doesn't care. The market is what it is. So it doesn't care about that, but it happens. So
I think I encourage all the traders that I talk to and my friends to like make it your own, because I really believe that we each come to trading with our own personal backstory and our emotions that we tend to gravitate to more rapidly, and our troubles that we slide into, whether it's depression or overexcitement or nerves or, fear or a lack of fear. And I think figuring out who you are by journaling and by talking to other traders, and then targeting the ways that you specifically need to grow, I think it makes it way more powerful more quickly, because you're making it personal. You're working on your own psychology versus any sort of generalization. And then that's where I think the real growth can come, because you have to grow as a person in order to become that consistent, disciplined, focused trader. And I think that that's been true for everyone that I've ever met, is that they've been slightly different from me in the ways that they've had to work through it. But when they targeted their own specific trigger points, that's when they found their breakthrough.
Culturally, like I believe in like Buddhism, I follow a lot of Buddhist principles, right? And that's very conducive to trading. And this has always just been something that I've done for a long time, even before I started trading. But the fact a lot of inner work is done, like where you work on your own psychology or your own brain or your own Zen, that's very conducive to trading, because the only thing that we can control when we're trading is our risk and our reactions. The market is in control of everything else. If you like look at yourself, from the outside while you're trading, and you imagine watching yourself and you were your manager, how would you want yourself to react when things aren't going your way? Is just, absorb your risks, just stop at your stop losses. And if it does go your way, don't get too euphoric, to try and remain as neutral and make good decisions based on what's going on at the time. That I learned that in a different way by the Buddhist principles and stuff. It really works with trading as well. So it's quite a nice parable to get your trading a bit better.
Yeah, that's so smart. And I've been learning more about the different Buddhist principles in the last couple of years, especially based on just how my inner circle has changed as I've been growing as a trader. And it's such a more peaceful approach to all of it, like just allowing things to flow a little bit more and allowing your energy to just be more in sync and not as excitable, and have more faith and patience. And it's really a more enjoyable experience coming at it from that perspective for me as well.
Yeah, so I've got a friend called Rajan Dhall, and he does a lot of mindfulness with traders, and he had to change the name of it. He couldn't call it mindfulness. He called it mentally fit, basically because a lot of the traders were guys, and they wouldn't go into like a meditation, or they wouldn't go into mindfulness training and stuff like that because of the outside perceived notion of what it looks like. So he called it mentally fit boot camps for traders. And he got a lot more, people involved through that way. And we were talking about the principles, and they're the same. It is like being mindful, and it is, like visualization and a few things like that. And it does work. It really, really does work. You just, need to take an approach that's conducive to trading.
That's so smart, because I was talking to traders the other day too, and I was talking about how breathing can reset your nervous system and bring your adrenaline down. And in your trading day, having some focused breathing sessions is actually really powerful for staying in sync with your trading system. And I literally was like, this is what they teach in the Navy SEALs in order for them to execute at their peak performance, is box breathing and restabilizing your heart rate. And so by putting it into that literal like fitness sort of approach of like, this is your physical body reactions that you can help control with breathing techniques, it's a different approach to like, just practice deep flowing breaths. It speaks to people differently, but the fundamental energy and effectiveness is powerful, however you frame it.
It's psychologically proven, like through science. They've done psychology, like EEGs and brain scans of people. So there's a book called The Hour Between the Dog and a Wolf. Have you ever read this book?
No.
Oh, okay, so it's all about the physiological effects of risk. They test fund managers, traders, and stuff like that about their nervous system and their chemical reactions in their brain to risk. And it's a very good book to read. It's obviously it's a bit wordy and it's a bit science, but it's worth a read because they talks about how our brain works when it comes to risk, because trading actually goes against all, I think, a lot of human behavior of being safe, being protected, greed, fear. It's the opposite of what human behavior is, which is why it's quite a hard job. This book talks about that. It's really nice.
Yeah, amazing. I definitely want to look that up. That sounds like right up my alley.
It's definitely decent. Yeah.
All right. Well, any last thoughts and tips that you would want to put out there in the world to help support traders that are working through this exact experience?
Yeah. So when people walk through the door or I talk to them at D&D, I always say to everybody, self-acceptance and kind of authenticity is one of the most important things about being a trader. So if you are an idiot, be an idiot. If you're happy, be happy. If you're sad, be sad. Because the best traders that I know are kind of authentically themselves, because they're not fighting themselves to work out how to get through this industry or get through this job. So that's a kind of mental, psychological standpoint. From a technical point of view of learning how to trade, is understanding market mechanics, your £100 or $100 or $200 is not going to make a difference in the market. The big players move this market. So understand those footprints, where those traders and what those traders are doing. And another thing I say to the guys at D&D is put yourselves into the mind of a millionaire or billionaire fund manager and think like that, because that's where the money flow is going to go. They don't care about our $1,000 stop loss, $2,000 stop loss. That's not going to move the market. The big boys move the market, and work out how they move and follow the flow. So those two things together, two opposite ends of the scale, but they're both very important to be a good trader.
I love that. I love that you had one on opposite ends of the scale, because that's really exactly how we have to be as a trader. You need to have a strong technical stance and understanding of what moves the market and why and how you can get in alignment with that and take your bite out of the move. And then also be yourself as a trader and make it work for you.
Yeah, and having podcasts like yours, where you talk to people who have different views, different values, different things, it just shows you that there's so many ways to make money in this game. It's not fundamental analysts can do good, technical analysis can do good, statistical analysis can do good. It doesn't matter. Just find out what works for you.
And you said that at the beginning of this interview too. You said when you were meeting traders that had been longtime traders in these big companies, they weren't different kind of humans. They just had longevity in the game and experience and settled into that role. And so there's nothing to stop us from being that as well. It's just show up for the work of it and keep at it and work on yourself through the process. That's really powerful information, that they're not some superhero.
Correct. Yeah. And they're all just as wrong as each other and just as right as each other. Yeah, for sure.
If people want to know more about you, you give us some contact information to put in the description?
Of course. Yeah, I'll send that to you for sure.
Okay. Cool. Well, thank you so much for your time today. I really have enjoyed this discussion, learning more about you. I think that what you have built over the years is really powerful and something that I can't wait to get farther along in my career and get where you are even more.
Yeah, no worries. And if you need anything at any other time, just give us a shout and I'm always here.
Awesome. Thank you for your time. And we'll look forward to hearing more from you out in the world. Thank you.
Thank you, guys. Cheers. Bye-bye.
Yeah. Happy trading, everyone.